Hi, everyone. Dan Bird here with the daily scan for the first trading day of the new year, 2025. I hope everyone had a really nice, happy new year and was safe and enjoyed time with family or whatever you decided to do to watch the ball drop. I've got quite a few things to cover in this first day of trading. So as you can see, my image there says 2025, looks ominous. And we'll see if that happens. It's hadn't started off too great. Actually, it was down today. We'll take a look at that. I did get a note from one subscriber saying that lots of people are getting nervous and thought maybe it was going to go up, but it went down instead. So that's one thing about the market. Don't anticipate what's going to happen. Don't listen to what other people say is probably going to happen, including me, by the way. Nobody knows. No one knows what the market's going to do. So you just have to be prepared. You have to understand your risk profile. I am not a financial planner, so anything that I say does not constitute a recommendation to buy or sell a stock or ETF. You need to do your own due diligence. And if you want to engage with a financial advisor, you can go to this site right here and check them out. So is 25 going to look like 22? I've been saying for a while that very likely could happen. So we're going to take a look at some things here today and see what things look like. Might not be as bad as people think right now. All right, let's jump into it. First, let's go over to the home page and take a look at the market. Bias is still heading down, went down a little bit more today. A few more bearish signals today, slowing down a little bit, but and there were some signs as I went through all of those. There were some signs that things might be turning around. So we'll see. So here's what it looks like. You can see there's a couple of new red ones. There's one new green one on Brent, which actually is not the ones that you want to see go bullish. Oil and gas, you would rather see those be bearish, but that's the way this works. It takes into account everything in the market. It looks at indexes, sectors, industry groups, relative charts, commodities, and metals, and currencies, and then puts it all together into an overall picture. Right now, 50% of all of the short-term, medium-term, and long-term, 50% of all of these are bullish. So that's why this has been heading lower. So we'll take a look and see what there is to see. Let's look at Bitcoin real quick, just for fun. I mentioned before that it might be setting up a head and shoulders pattern right here. And I mentioned before also the last few videos that the left shoulder over here took a couple of weeks to build out. And I said that this one might do the same thing. It went right down to the neckline support. And now it's going back up. In order for this to be invalidated, it needs to break through this left shoulder resistance area right there. So back above 100K, essentially. If it gets back and closes above 100K, then there is no more head and shoulders. So it's not really a good pattern unless or until it actually breaks through the support down here. So this is just something we're watching. If it does, the target 77.5, but it hasn't done that yet. And it may not even be a head and shoulders. We'll see. But this is doing exactly what I thought it would do. Basically just going sideways, building out the right side of the shoulder. We'll continue to watch it and see what happens in the future. All right. Before I jump into any more, I want to first show you guys something from Stock Traders Almanac. And I'm going to put this in the newsletter this week as well for anyone that's interested in the newsletter. Let me show you where that is. Back on the webpage. So if you go to the homepage, if you go to breakpointtrading.net, and it does not require a subscription to look at these buttons that are up here on the top. So anybody other than these three do require subscription. But the newsletter's right here in this box. You can get to the YouTube channel anytime you want, right from the front page of the website. But this is where the newsletter is, and what I'm going to show you is going to be in there this weekend, so you'll have a hard copy of it if you want to print it. But this is what it looks like. This is from Stock Traders Almanac. Each month, they give you a historical view of what the market looks like. And then what I do is I put in some important dates. These dates are not what Stock Traders Almanac does. I put these in. And let me turn on a pointer here. Okay, so we are here right now, first day of trading. We got 2 days of trading this week. Santa Rally ends tomorrow, so it doesn't look like it's going to be positive. We'll see how negative it will be by the end of the day tomorrow. And then next week, the first 3 days will be what's called the January effect, essentially the first 5 trading days of January. So that's the next key thing that we want to look at. And then we get into the week after. So the next week is kind of choppy, a little bit, maybe sideways or down tomorrow. And then we may go maybe choppy a little bit till the middle of the week and then start to rise in the middle of the week. And the dark lines here goes all the way back to this goes 21 years back to 2004. The dotted lines here are post-election years, which is what we are in right now. That goes back to 1950, just to give you a sense for the data sample. So as you can see in post-election years, it outperforms the normal years. So we might have a better than average January if we follow the historical trend. And just because it is a historical trend does not mean it needs to follow it this year. Could do the opposite this year. But historically, that's what happens. So the first key event is the inflation CPI report on the 15th. I'm going to look at that in a minute, what that looks like right now. Then we have options expiration just 2 days later. So this could be a volatile week. As you can see, normally it actually goes down. But because we have been selling off lately, I expect we might actually go up for options expiration week. And I'll talk about that more when we get into that week. I'll talk about Max Payne again. And then interestingly, we have Inauguration Day and the MLK holiday on the same day. So it's a day off. It's a federal holiday, Martin Luther King, and Inauguration Day is on the same day. So that might be a little bit of volatility. Now, the market won't be open that day. So if anything traumatic happens during that day, the market won't be open. So it will get reflected the next day on Tuesday, the 21st. So we'll keep an eye on that. Hopefully there won't be anything that happens. It'll just go along smoothly. And we'll have a new president starting that day, the day after. And then we have the Fed meeting at the end of the month on the 29th. So we'll see what the Fed's going to do. I likely won't do anything. I don't think they're going to cut. I don't think they're going to raise. I think they probably will leave things right where they are, but the wording will be the important thing. And that may have a lot to do with what happens right here with the inflation report. So that's what the month looks like for January. That's what you can kind of expect to see. Now, if we go back over here, I want to look at CPI just for a second. Just that I haven't looked at this lately, but I'll explain CPI here too for those that haven't seen this before. So this chart here shows you CPI. CPI is determined by what's called the base effect. The base effect is essentially a 12-month window, and it reflects an average, a year-over-year average of CPI. So when a new one gets added to the front end, one drops off the back end over here. So if there is a fairly small one that gets added and a fairly big one that drops off, like what happened back here in July, then CPI will go down dramatically. What happened the last time is we had a fairly big one. We had a bigger one get added than we had drop off. Right there, that's the one that dropped off. And as a result, you can see CPI actually went up slightly. So that's what everybody was yelling and screaming about, that inflation's coming back. Well, we'll see. I am not convinced yet. So what do we have now? January is an average, pretty average one. So we'll have to see what gets added onto the front end up here. I suspect that it probably is going to come in reasonably flat, probably around the same number, 2.7 or 2.6. I don't know what the forecast is. I'll know that when we get closer to that week. And I'll post that in the newsletter for those that are interested. So that's how CPI works. You can see down here, it's starting to tick up slightly. This is headline CPI. Here's the 1 month rate of change, also moving up slightly. We actually had deflation in during this period, which I will move this up so you can see what I mean. This area right here was actually deflation because it went below zero. So that's the 1 month rate of change for CPI, but it didn't stay there long. It came right back up again. So we'll keep an eye on that when CPI comes around, and we'll talk about it more as we get closer. But I suspect it's going to be fairly flat, but then the month after, February, March, April, May, look how big these are that are going to drop off, especially the March one. This is going to look like it'll cause the base effect, the 12-month average, to start to drop. So it's going to start to look like CPI is dropping off very quickly once we get into next month's report. This month is going to be fairly equal, I think, pretty static. But then CPI is going to start coming down dramatically for 4 months in a row. And then we have negative CPI right here. So this is where we'll start ticking up again. So hopefully we'll have it come down fast enough that it will actually be below 2% or maybe near 2%. So that when we get to these months, these 2 months here, which is going to make it look like it's going back up again, it won't be coming back too much. We'll still be right around that 2% area. So we'll see. So that's why I say I'm not convinced that inflation is back yet. All right. What else? I want to show you a chart that I put together because I thought it was interesting. I heard this from somebody or read it somewhere that Bitcoin and the TQQ, let's see where I put my chart now. There's lots of charts on here. So here it is. Bitcoin correlation. So TQQQ is the 3X NASDAQ 100. So it's an ETF. And what that means is if the QQQ goes up by 10%, then it goes up by 30%. So it's a triple leveraged ETF. So when the NASDAQ 100 goes up, it goes up 3 times. And I heard that Bitcoin was correlated to the TQQ, which is I thought was an interesting premise. So here's the TQQ. It's a blue one up here. I've got gold on here too, and I have Bitcoin. You can see they are actually moving up pretty much in unison with each other. Now, these charts down below are correlation charts. So they show you the correlation between these different components. So if it's above 0, that means it's correlated, and the higher it is, the closer to 1 it is. In fact, if it's at 1, it is exactly correlated. So it moves in tandem. So this is Bitcoin with all of these other ones. So Bitcoin, this is MicroStrategy. As you would expect, it's highly correlated. So MicroStrategy moves almost exactly the same as Bitcoin does. The next one is gold. And interestingly, gold is also fairly highly correlated. Now, there are some periods where it's not, where gold moves the opposite direction of Bitcoin. You can see right here, gold was going up, Bitcoin was going sideways. So that is not correlated. That's what pushes it below 0. Over here, you can see gold was going up, Bitcoin was kind of coming down. So it's not correlated. And that's why it's below 0. But look at TQQ. Interestingly, it is, for the most part, very correlated to Bitcoin. There's a couple of areas, just like with gold, where it is not correlated. So this one here, for instance, TQQ is the blue line. So during this period here, the NASDAQ was going down while Bitcoin was going up. So not correlated. Same thing over here. But in general, look at how often it's up in the green, above 0. And in fact, it's fairly close to 1. So it is highly correlated, which is very interesting. So TQQQ during bullish periods for Bitcoin, it should also be bullish because it pretty much follows the trend. So that was an uh, interesting data point that I read, and I thought I would create a chart for it. So if you are a subscriber, you go to the charts page and you scroll down here on the left-hand side under index charts, and it's down here in this Bitcoin section. So I also have the Bitcoin halving, which I've talked about before. So that's the Bitcoin halving and what happens after Bitcoin halves. Actually, I need to update this because Bitcoin is actually much higher than that now. All right, so that was interesting. So another thing I want to show you is this is ACP. This is for stock charts members. This is their new advanced charting program. And let me bring this in a little bit. So here's what it looks like. So I've got daily on the left, I have weekly in the middle, and I have monthly on the right. And this is for the Qs. So what you'll notice, first of all, on the monthly, and let me do SPY just for a second for the S&P. Yeah, so if you'll remember back on my website on the charts page up near the top under index charts, I put this in here. This is a monthly chart of the S&P. And this is something that I saw from John Carter at the Money Show. And this shows you over here, this is momentum. So when it's light blue, that means the momentum is increasing. It's higher than the previous month. When it's dark blue, it means momentum is declining, meaning it is lower than the previous month. And back in 2021, just before we had the bear market of 22, that's why I put that image in the very beginning. Are we going to experience 2022 again? You can see in November and December, as the market was hitting all-time highs, momentum was declining. Now, these are monthly, so it takes a long time. So this is the full month of December. Since we're starting January, this is a good bar for December, and you can see it is lower than the previous month. So momentum is starting to decline. I looked at it today, and even though we're one day in, this is actually lower still, and that would make sense because we went down today. So if we're going to go down, then the momentum is going to drop as well. But these 2 months back here were actually bullish months, and then 22 was down the whole time. So that's kind of what this right-hand one. This is the monthly chart. You can see it here for the SPY for the S&P. The one in the middle is the weekly chart, which is a little bit longer term. And by the way, I'm going to make some changes to the market timing strategy, which I'll talk about at another time. But start to use weekly charts instead. And the point that I'm making here is, number one, yes, we need to start watching because momentum is declining. And that's what happened back here in 22. And you can see what happened to the market in 22. That was the bear market. Pretty much the whole year, it bottomed in October and then started coming back of 22. We are looking eerily similar right now in momentum. Also over here, this is the weekly chart. It is still not concerning yet. So yes, it's starting to roll over right here, but it's done that before a few times. It did it significantly back here in 23, but it came down to the 21-week moving average and then bounced back up. Actually went below it, but closed above it and bounced back up. So we might be doing the same thing. It could come down here and bounce back up. Right now, this is not a chart. Neither one of these is a chart right now where I would be saying, get out of everything and go to cash. The MACD up here is still way above zero. So yes, it's chopping around a little bit, but that is typically what happens when you have a strong trend like that. You can see the trend. I went through the ADX on Tuesday. So you can see the ADX actually is below 25, which means it's not a strong trend. The one concerning part is that the red looks like it's just about ready to cross the green. So if that happens, that happened back here during this period when it went below the 21 but closed above it. It happened back here during this period. This was a more extended downtrend. It did not happen here for this period, and it did not happen here. So if that continues, and if we get a few more down days, then it very well might not. Remember, this is a weekly chart. So this is not going to give a full candle until after tomorrow. And it could easily come down to the 21 and then bounce back up again. But this down here is concerning. It's still below, both of these now are below the 25. So all of this is implying that it's not very strong yet, but something to keep an eye on. Now, if we move back to the daily, now it's clearly bearish. So MACD is crossed right there. It is below the 0 line. It's below the 21 and the 50, well above the 200. But these are all warning signs on the short term, on the daily chart. We're sitting right at a very important support level. You can see this was resistance over here, came down, it broke through it, touched it here, and we're at it again right now. So this is really going to be the turning point. If it holds and goes back up, then that will be positive. But if it breaks through and starts to go down, and if these roll over too, and I'm talking about probably in the next week or so. So if the market does what it's historically done in post-election years on that chart that I showed you in the beginning, then we may be getting a bounce and accelerating for the next couple of weeks. But if it doesn't, and next week is a down week just like this week has been, then I think it's time to move out, to get out. We'll see. You can see down here even though the ADX line is below 25, so this little downtrend right here is not real strong yet, but the red is above the green, and it crossed above the green back here, right there. So that was the first warning sign right there. So this is something that we need to watch. Right now it's just in a sideways pattern. It actually also has a head and shoulders pattern, so it needs to break through this, which is a pretty solid support level, but this could also be a head and shoulders pattern right here. So that would send it to roughly, let's call it 608 to about 585. Let's call it 605 to 585. That's 20 points. So that would send it down to 565, somewhere down here at the support level. That would be the target if it does break through that head and shoulders pattern. So that's where it would head to. By the way, this particular chart, and let's look at some other things on here. Let's look at IWM. This is the Russell 2000 for mid caps and small caps. You can see it's holding in right here at a really important support level. So mid caps and small caps typically start their run in the middle of December, right into April, but they have been delayed this year. It's not starting its run yet, and I think part of the reason for that is the 10-year Treasury. So we need to watch that in conjunction with this to see if this is going to take off. Right now, it's just going sideways, sitting right there. You can see on the weekly, it's now below the 21. And on the monthly actually looks okay still, sitting right on the support line. So if the monthly breaks through, it's going to probably come down to 200, which will put it over here, maybe down to the 200-week moving average, and then 200 over here would be down here. So that's IWM. We can also use this to look at Bitcoin. There's Bitcoin. Bitcoin had a nice day today. So there's that head and shoulders that I talked about. Had a nice little bounce today, which is nice. And the momentum is starting to curl back up on the daily. So that might actually be good. And you can see the green has not yet crossed the red, but it's starting to go that way. And over here on the weekly, it's still a little bit overbought on the weekly. And on the monthly, it actually had a shooting star candle, which is a bearish reversal. But momentum is still pretty high. It's pretty high here and here too. And momentum is just starting to move higher here. So we'll have to watch this. Again, it could continue to go sideways, but it needs to break above 100,000 in order to invalidate that head and shoulders pattern. Let's take a look at TNX, dollar TNX. This is the 10-year. So there's the 10-year Treasury. It came up today, but you can see it's beginning to roll over. Also, if you'll notice, it has not reached back to the high back here in April. And 5 is the high that was reached back in October, and that high actually goes back quite a ways. Over here, this one goes back to 2017, and you don't even see the high on here. That's how far back it's higher than that 5% level. So it looks like it's just trading in a sideways movement right here, although the momentum here looks like it's ready to go up, and it is in a squeeze on the monthly chart, which could imply it might be getting ready to take off. If that happens, then you can count out the small and mid caps. So this is the thing to watch if you want to get into small and mid caps or the Russell 2000 IWM. Watch the 10-year, see what it's doing. If it starts to come down dramatically, then then TNA, just a triple Russell 2000. You can see it's doing the same thing, just going sideways, sitting right on this really important support level. Momentum is starting to pick up a little bit on the daily, so it might be getting ready. But on the weekly, it looks like it still has more room to move lower. And the red crossed the green down here. Red's still above the green, by the way, even still over here. And on the monthly, everything is below the 25. So not a strong trend, but if it does start to pick up and move higher, and this does go above 25, then it's going to take off significantly. But that's not happening yet. So don't anticipate, like I said before, nobody knows what it's going to do, including me. So wait and see what actually happens. All right, one more thing I want to show back on the charts page is this is a seasonality thing, something I read today. This is so on the charts page, I have all of the sectors and the industry groups for each of the sectors. By the way, energy did really well today. I'll talk about that in a second, but let's look at seasonality. So this is communication services. This is where Netflix and Google are. And there's the chart for XLC. It's been pulling back, chopping a little bit, hit the 50-day and bounce there, but it can't get through the 21 yet, so it's right in between the two. But it's trying to make a move higher. So let's go back and look at seasonality, because seasonality, so I'll show you what I'm doing here. So I'm clicking on this button right here that says seasonality. So if you click on that, you get a chart from Stock Charts, and you don't need a subscription, I don't think, to get this. And I'm going to move this back. Let's go back 12. Let's see, let's go back 10 years. There's 10 years right there. So here's January over here. 80% of the time, this is a percentage of months that it closed higher than it opened. 80% of the time, it closes higher than it opened. And it closes 4.3% higher than it opened. So you can see the only other two months that are stronger is May and July. So January is a pretty strong month for XLC. And if we go back, actually, you know what? I'm going to move it because we're in January right now. So I'm going to move. So this is a little bit inaccurate. I'm going to move back 1 month right there. Still pretty much the same, but 70% of the time it's higher in January. And you can see as I move further back, it goes down when we get back into the COVID period, or the what year are we in? 2007. Yeah, that's the financial crisis. So if we go back here, 12 years back, 11 years. So it's one of the strongest months. There's 70% for 10 years back. One of the strongest months for XLC. Now I can also compare it to the S&P, and now you can see, we'll do the same thing. We'll move this back 1 month, or 1 month, and then go 10 years. And you can see when I'm moving this back, it doesn't move at all. 100% of the time it outperforms till we get to 13 years. So all the way back to 12 years, 100% of the time it outperforms the S&P. So XLC, and it usually outperforms it by 2.8%. So XLC and the stocks that are in that, which is Google and Netflix and some others, Meta, it should do really well in January. So that's one to keep an eye on. And if we go back here and I'll look at it over here, you can also look at the charts here on a weekly basis. XLC right here, weekly. So you can see weekly, it's had a really strong run. It's pulled back a little bit, but it hasn't come back to the 21. And even if it pulls back a little bit tomorrow and maybe into the beginning of next week, it might be setting up for some nice gains going into the rest of January. Let's look at Google. Google just going sideways. Weekly looks strong. It's losing momentum on the monthly, but looks pretty good. It is still in our daily scan, by the way. Netflix also just kind of going sideways. Netflix has been really strong. It gave a short-term down signal today. So weekly and monthly still look really strong. It's losing momentum on the weekly a little bit. So keep an eye on that. And then look at Meta. Meta actually had a pretty good day today. So Meta moved up and pulled back. It's right at the 21 day. Weekly, it's going sideways. Monthly, it's hanging in there. So all of those stocks might be very interesting. January, that sector loves January. So it could do really well. So here's the internet industry group. If we look at the whole industry group, you can see how well it's done recently, usually pretty much on the backs of those three stocks. And it's pulled back right now, right to the 21 day, which is a reversion to the mean. So that's the area where we would hope to see it bounce. So here's the Kelner Channels, which I covered a couple of weeks ago. So there's the reversion to the mean. So it went up to an extreme area in the 4X Keltner. And then normally what happens when it does that, it reverts to the mean, comes back to the 21. Right here, it got to the 3X, reverted to the mean. Got up to the 4 and 3X up here, and right now it's back the mean. So if it holds true for January, it should begin to start moving higher right from here. This is the area where it should bounce. If it doesn't, then we may be in trouble overall, actually. All right. One last thing is for subscribers to the website, on the portfolios page, I have just added, so these are the end of year tax loss harvesting stocks I talked about last week. I actually got into some of these just to see how they would do. And interestingly, you can see all 33 right here. I'm not going to click on that because you need a subscription. But I actually got into 10 of those, and some of them, in fact, a couple of the ones that I used as examples last week actually did start to take off today. So that one's looking really, really interesting. This is not meant for a long-term hold. This is probably just a couple of weeks. But so far, I mean, some of these are up 5% or more in just one day. And then the dividend stocks down here, I have two sections. I have dividend aristocrats, which if you click on it, explains what those are. These are stocks that have a dividend it's increased the dividend for at least the last 25 years. And they tend to be large companies, very liquid. If they don't increase their dividend, they drop out of the aristocrats and they can't get back in for 25 more years. So it's a very strong list of dividend stocks. And then I sorted them using this criteria. So no ETFs, volume over 100,000, dividend yield of 2% or more, market cap of 5 billion, must be profitable, outperforming both their industry group and the S&P over the last 2 quarters, and prices within 5% or more of the 200-day moving average. So 25 stocks made the list, and then I show these in this file right here, sorted 3 different ways. I sort them by dividend yield, so the ones at the top have the highest yield. I sort them by the last 12-month performance, so the ones at the top have performed the best over 12 months, and then I also sort it by technical rank. So the last 6 months, their charts look strong compared to the other ones. Now today I just added the Vanguard high yield, and Vanguard has a high yield and a high performance list. So I put all of those lists, all of those names into a chart list in stock charts, and I ran the same scan. In this case, this one up here gave me 25 stocks. This one only gave me 18. So I'm showing in sort of the same way, but I'm showing all 18 in this case. Up here, I'm only showing the top 15. Down here, I'm showing all 18. So for those that are interested, these are meant for long-term holds. And one of the questions that somebody had was, what do you use for entries for something like that? So one that everyone I'm sure knows about as a dividend aristocrat is IBM. So if we look at IBM just as an example, it should follow a similar rule that they do with the daily scan, which means you want to see it pulling back, which IBM is right now, and then you want to see it start to move higher. So you want it to get above the 21-day moving average. That has not happened yet for IBM. So that is the first rule for entry. Wait for a pullback, and then wait for it to start moving above the 21. And preferably with momentum moving higher, with the MACD above the zero line, all the other things that I talk about. The green line crossing the red line for ADX, like I talked about on Tuesday. For IBM, that has not happened yet. So you would just wait and see when that happens, and you can look at it on the weekly and the monthly. Now, once it does, once you do find a good entry point, then I would suggest using the weekly chart to monitor it and for setting stops. Now, these stocks are meant for a year or more to try to capture long-term capital gains. So for that reason, in fact, the test that I ran last year, I said, don't put any stops, just let them run for a whole year. And every one of those, in fact, I'll show you what they look like. But everyone except for one were positive for the year. And these are a subscriber actually sent me his list that he used. He took the list from that list that I just showed you and did really well. So these are his dividend stocks. So these are the ones that he used from the list right here. If I look at this on a 1 year basis, because year to date would just give me today, of course, and then look at their performance. So NatWest, almost a double. Brown and Brown up 43%, 38%, 34%. You can see down here, Otis and Lynn, these were still positive, but not as well. And the only negative was OpenText, the only one that lost, and it lost 28%. So while the test or the theory on that was just to hold it for a whole year, doesn't mean you have to do that. You can certainly set stops for some of these. So if we look at OpenText and look at it on a weekly chart, so you can see right here, here's 24. It moved up the first couple of months, but then on a weekly chart, when it went below the 21 right here, maybe you'd get out right there. Momentum was moving lower. These were moving down. The ADX line was below zero, or below 25 rather. And then, or you could wait till it crossed right there, right in this area. But this is the way you might want to do it if you want to play stops. So what I would do on something like this is I probably would have placed a stop. I would have been aware of this where all these moving averages are crossed. So I probably would be out right in this area right here. So that's, for me, is probably where I would want to be out. So you'd be in it for basically 4 months and would take a loss, of course, when you got out, but you wouldn't take as much of a loss. Now the other stocks, like if we look at NatWest and look at this on a 2-year chart. So here's 24. So this was on the list right here. So you'd get in right there or wait for it to move above the, actually look at it on a 1 year. Way back here. So it bounced around right here. So probably right in here when it got above the 200-day moving average and above all the moving averages, That would be an entry point, and then the stop would be, let's see, this is 2-year chart. Yep. So the stop, so you would have got in right about here, and then you just follow it up. So your stop would be below the 21, and it never stopped out. It just kept moving up. So I'd use the weekly for stops, and I'd use the daily for entries. That's the way I would do it. Or you could just buy them all. They're all good names. For those that will take a look at the list, both of those lists, they're all really good names that you will recognize for sure. And they all should do well. Now, all that is in context with the overall market, of course. If the market goes down like it did in 22, then everything is going to go down. So the reason to get into these for that kind of market is just for the dividends, just to generate income. So keep that in mind too. You want to take a higher view and then down to the sector, down to the industry group, as I've talked about before. All right, that's a lot of stuff to cover today. I do have one stop was stopped out, which was Walmart, but the other ones are still hanging in there on the daily scan. I'll just show you that real quick. So you can see there's only 2 left now. So Walmart got stopped out. So RDW, half a position. Both of these we have a half a position sitting there doing just fine. So we sold half at 28%, right about there, 28% gain. And if that one stops out, then it's almost 11% gain on that portion as well. And then Google is just going sideways, sitting right on the 21. You see the stop is right there. We took half the gains on Google, which I think was I'll look at it. But Google is in the communication services. So if that sector takes off like it normally does in January, then Google should also do well in January. So that's the reason I wanted to stick with that one. Let me just look at where we get out of Google. Right here, yeah, 10.5% gain on that. And we'll get another 5% up here if it stops out. But if it doesn't, if it does move up along with XLC, then we'll move the stop up as well. So that's where we are. No more additions today. We'll take a look at that. I'm going to probably change the criteria a little bit, start using weeklies instead as we move into the new year. By the way, that's the whole point of this spreadsheet, which is on the website too, is to take notes to see what works and what doesn't. So you can improve your trading as you go along, improve the way you scan for things, improve the way you do entries and exits. That's the whole purpose of this spreadsheet, is to help you identify what works and what doesn't work. All right, that's it for today. Thanks everyone for watching. Hope you had a great Happy New Year. One more day left for the Santa rally. We'll see how it ends up, and I will talk to you tomorrow. Take care.